Good evening, esteemed members. I welcome you all for this study circle meeting on the topic changes and amendments to GSTR-9 and 9C and impact of various disclosures. And to dwell upon this subject, we have two speakers for the day, and CA Rajesh Kumar sir and Vinay Karthik. May I request CA Arun Upadhyaya sir to escort both the speakers onto dais and then welcome them with floral bouquet. Members, I have privilege in introducing both the speakers. I would like to introduce CA Rajesh Kumar sir. CA Rajesh Kumar is a practicing chartered accountant specializing in indirect taxes with over 2 decades of experience in advisory, compliance and litigation. He is the proprietor of RKTR and Co. Chartered Accountants and a partner at Vinay and Vinay Chartered Accountants. Formerly a senior partner at Hirange and Associates, he established and led firm's litigation wing for more than 17 years, representing clients before SESTAT, Settlement Commission and Anti-Profiteering Authority. He has authored and co-authored several books on GST, service tax and central excise, and contributed extensively to ICAI's study materials on indirect taxes. A recognized speaker and trainer, he regularly addresses professionals, trade bodies and tax authorities on GST and related laws. CA Rajesh Kumar currently serves as Director at Federation of Karnataka Chamber of Commerce and Industry and is an active member of various indirect tax committees. With this brief introduction, I present before you CA Rajesh Kumar sir. Remember, the second speaker for the day, young guy, CA Vinay Kumar CD is with us. CA Vinay Karthik CD is a partner at Mesa CNK HSK and Associates, Bengaluru, with over 6 years of post-qualification experience. He specializes himself in indirect taxation with a particular focus on goods and service tax since its inception. Vinay regularly represents clients before various departmental forums and authorities, providing strategic advisory and litigation support. His expertise spans GST advisory, compliance management, audits, and dispute resolution. He actively contributes to the professional development of his team through training sessions and knowledge sharing initiatives on recent tax updates and developments. Additionally, he has contributed to several articles and publications by the firm for various professional bodies and forums. Outside of his professional pursuits, Vinay is an avid reader and enjoys playing badminton in his leisure time. With this brief introduction, I present before you CA Vinay Karthik. All to you both of you. Thank you.
Chairman, the branch, all the members who are present here. Good evening to you all. At the outset, I would like to thank Bangalore branch for giving us this opportunity of being here and sharing a little of our experiences on the subject with you all. The way we are structured, both of us together for the evening is, I am going to be merely a sort of a facilitator, not the speaker. I will pitch in wherever required and give some perspective to whatever is being discussed in the context of litigation, if any, arises in the subsequent course of time. Before I hand over the proceeding to Vinay, I would like to just briefly touch upon this annual return. Firstly, what is this annual return? Initially, when this GST was introduced and we were going and talking about this GSTR-9, I used to tell at many places, this GSTR-9 is a dummy return. What exactly I meant by dummy return is, in all the return, if you do something, it impacts either a cash ledger or a credit ledger. It affects your liability, it goes and hits the liability register somewhere. But whereas in the annual return, it's only a sort of a information which you are going to file. Action, if any, has to be taken by the department looking into that particular thing. So to that extent, it doesn't directly affect any of the registers. That's your credit register, cash ledger, or the liability register. So it's only an information or a key for the department authority to look at it and proceed further. So that is the broad perspective with which we can look at this return as. Again, when it comes to 9C, it is a reconciliation between a GST turnover and the audited financial statements. Person who handles the litigation always considers this as one of your fundamental tool you have to use when they start comparing figures and try to make a demand. Say, the law itself recognizes the fact that you cannot compare figures. There are going to be differences and the reconciliation has to be done. And what reconciliation is a number game. What I may put on the top of above the line, some other may put some figures below the line. That is, earlier traditional disclosures, trading profit and manufacturing account and the now that system is not there, but where we used to use above the line, below the line, all those things. So the context which I am just trying to say, in a reconciliation, different people may have a different style of presentation. There cannot be a uniform system of presenting the reconciliation statement. So in that scenario, what actually protects and how does it matter for each of the taxpayers? Till last year, all the this 73, 74, note is 73, 74, difference, all those things. Now whenever it is 74A, it doesn't. But the point is, where there is a fraud, willful misstatement, suppression of fact, then 74, otherwise 73. Now it only matters for the purpose of penalty, the issue of notice. The time period is 3 years, and whatever, 5 years. But I want to make a emphasize on the aspect or the background of this extended period of limitation and the context. What is this GST tax all about? What is the nature of this tax?
Indirect tax.
Indirect tax. What do you mean by indirect tax? Fundamentals. BCom, ROCA Foundation. Okay. What is indirect tax?
Collect from other person.
A tax which is expected to be collected from another person and remitted to the government. That means you are expected to put your hands into somebody else's pocket and take it and give it to the government. But if you are not capable of doing it, you have to put your hands into your own pocket. It becomes a direct tax. Merely by the fact that you can't put your hands onto somebody else, you are not relieved. If you are not capable of putting your hands onto somebody's pocket, doesn't mean that you are relieved from your obligation to pay tax to the government. Now, fundamentally, when it is expected that you are expected to collect the tax from somebody else and remit it to the government, if you are not done intentionally, they cannot ask you to go back and catch hold of and ultimately affect your business. See, any mistake on a direct tax, it affects on your income, but any mistake on a indirect tax affects your business itself, your going concern itself. So considering is all this aspect was initially, the normal period was 6 months and extended period was 5 years. Then 6 months became 1 year. Why that smaller period? Because you can go back to those people able to collect the tax and remit it to government. But if it is beyond certain limit, you cannot reach out to the customer and collect the taxes. So, but if you have done something with intention, fraud, etc., then you have to bear the cost. That is what is the historical purpose and background for this normal period and extended period. But over a period of time, this essence was completely lost. Why? Because in a litigation, 90% of the cases department lost based only on this ground. So hence, to protect the revenue they changed, but so they gave away this particular thing. Now why I am telling all these factors? Even though, the various 774 that's lost its importance, but still it remains in the penalty context for the present year which we are going to file returns. So if you are prudent enough, you have disclosed yourself what stand you are taking, why you have done certain things, you have not hidden something from the eyes of the administrative authorities, then they cannot blame you of any suppression. They cannot blame you of any willful misstatement. Because you have clearly brought out why you have done what you have done. If you have claimed certain exemptions, you have written exempted under so and so location. Though the respective columns may not have that provision, probably I think Vinay will give you way-outs where some things which you want to say, but there is no specific place for you to mention, how to put across those while you are filing your returns. So that at least somebody comes up and says, why did you do it? Okay, you can always say, no, I have a reason why I have taken this time. And it is already said by Supreme Court in number of cases that claiming a particular exemption doesn't mean that you have intention to evade taxes. Claiming a particular classification doesn't mean that you have intention to evade taxes. So it should be with a mala fide and that should be established by the department. So it is not that mere default will make you liable for various consequences. It is the other way around. Okay, where they have to establish that you have done with mala fide with sufficient evidence to support that claim. Unfortunately, none of the notices which are being presently issued will have any of those ingredients set out. Merely they say this was unearthed during the audit. This came to the knowledge only in the course of audit, but for the audit there is no, this point would have not come to the knowledge of the department, thereby that whatever the provision is involved. Inability of the department is not what is said in the provision, it is the positive action which is expected from the taxpayer to evade tax. Suppression is again one of the definition given there, what you are supposed to have disclosed in return if not disclosed. But the provision doesn't stop there, suppression to evade tax. So to evade tax is an attachment along with that particular thing. So while you are filing, any doubt you have, better disclose the stand, why are you taking, what are you taking, so that it can protect you from future liability from a disclosure aspects and various other factors. Okay. I think with this brief introduction, I now hand over the proceeding to deal with various changes which is there required to be known for this particular financial year 2025.
Good evening, everyone. Audible there? No, not audible? Now?
Yeah.
Okay. Now it's better?
Yeah, it's great.
So actually, sir has made my task very difficult. He said it's a donkey return. So whatever I say now, it just stays in the dust. But nevertheless, He also highlighted a point that any disclosure that I make will certainly be very useful for me in the future. If at all it goes to a point where we have to litigate a particular point. So picking where Sir left, how many of us have received notices, be it central or state, alleging fraud, saying that there is a difference between 2A versus 3B, but the source of information is table 8? All of us? All of us, right? So if my own information was already there with you when I filed a particular year's 9 and 9C, what stopped you from doing a proceeding or an investigation or an audit back then? Why did you wait for 73 period to get over and then allege that it is a fraud? How did the audit unearth this when it was my own declaration? I agree table 8 is auto-populated. Most of the things are not in our control. There are ways to mitigate this. Considering that I've done a mistake, it's a system-generated issue. How can fraud, suppression, or willful misstatement happen if the source of information is just table 8? So that's where today's topic is very relevant. Considering the fact that any and every disclosure that I make either comes back biting me or it will go back biting me. So that's the only. Again, I would like to thank our institute for giving me this opportunity for presenting this session on GSTR-9 and 9C for the year 24-25. So all of us have dealt with annual returns. It's nothing new. We've had 7 years of experience of what all mistakes we've done in 17, 18, 18, 19, 19, 20. How did we correct that in 20, 21, 21, 22? Now the government says, okay, I know you have settled yourself, now let me do some changes. So this year there have been quite a number of changes in the disclosure. So before I enter into our changes that have happened for 24-25, I thought it's better for us to revise or refresh ourselves as to how the entire structure of GSTR-9 and 9C was laid out. So I have captured the table, basically the table numbers. So 1, 3, 1, 4 basically refers to table number 1 and 3 of the particular form. So 1, 3, 1, 4 of 9 and 9C basically is auto-populated as system generated information. 4, 5, 10, 11, 14 and table number 9 of GSTR-9 and table 5 to 11 of GSTR-9C deal with our outward supplies. So what was the sales that I made during the year? What was the sales that I made during the year on which I did not pay tax? What was the sales that I made during the year for which I paid tax subsequently? What was the sales that I made but accounted in the financials? So these tables in a consolidated manner capture these transactions. 6 to 7, 12 to 13, table 8 and 12 to 16 of GSTR-9C deal with our ITC related disclosures. 15 of 9 deals with refund and demand, again that is optional this year. 16 talks about the composition of the deemed supplies that I have received during the year, again optional. 17, 18 talk about HSN details. 17 deals with HSN on outward, 18 deals with HSN on inward. While 17 is mandatory, 18 is not mandatory. A sigh of relief actually. But to capture HSNs of my purchases is a Herculean task, which is not possible. If we are a person who is claiming refunds, we are habituated to do that. Otherwise, generally, HSN is not captured. And 19 is a system generated, that is the late fee paid or payable. All of us are familiar with these table numbers because most of my session will be around table 6, table 7, table 8. Should I pause so that we settle this inside? Or any doubt in the basics? Because in today's session, I've just tried to focus on what are the changes, and majority of the changes are in relation to my ITC related disclosure. So I have captured various scenarios as to when what should be disclosed at what table. So I'll be skipping all the basic disclosures with the presumption that we know. At any point in time, if anyone feels I'm either too fast or the table numbers you're not able to catch up, just please raise your hand. Stop me at that point. So, just saying on this stage, how many of us have interest from fixed deposit in our clients or our business? All of us? How many of us disclose this as exempt turnover in 3B? No one. In GSTR? No one. In GSTR-9? No way.
Somebody is raising.
Okay. Sorry. So we do it, right? So in GSTR-1 3B or GSTR-9 directly? All the three. Perfect. So that's the most ideal situation because FD interest is an exempt transaction. Though I don't pay tax on it, it warrants a disclosure in my returns. Now, another basic question. When I start GSTR-9C, that is turnover from my financial statements, what turnover do we take? Do we take revenue from operations or we take total turnover? I couldn't hear. Revenue from operations. So that's the reason we skip other income, FD interest goes in there. How many of us have got audit query saying you have not paid tax on other income? I'm sure we handled audit proceedings, right? So that's the most, it's a template nowadays. Other income you pay tax, exemption you pay tax. You've done export transactions, you prove it's export pay, otherwise pay tax. SEZ you give endorsements, pay tax. So this is the standard template. So why I asked you the simple question of whether it's revenue from operations or total income, we can always say at a later point in time that see, I agree I did not show it in 1 3B or in fact GSTR-9 also. But in 9C it was always captured that this is my turnover and I gave an adjustment at the bottom saying that this is being reduced. Or if I go to table 5 of, table 7 of GSTR-9C, it talks about all the exemption or non-GST or no supply cases. So at least I would have disclosed it there. So the point that I want to make is we have disclosed it somewhere. It has not gone unrecognized. So that's why this becomes very important. Again, I remember I think we handled audits for 17-18 till 21-22 because that was the last year for which 73 time limits got over. All of us would have got wherever we have had SEZ transactions where we have chosen to not pay tax. We would have got a query, right? You give me supporting, for want of supporting documents, tax at the rate of 18% is charged. Now, firstly, for these years 17-18 till 21-22, what documents do I give to prove that it's an SEZ transaction? SEZ endorsement. Now coming to the endorsement, is it mandatory for these years? Is it mandatory to give an SEZ endorsement for those years?
Definition was amended.
Right.
Unauthorized operation.
Right. So that happened only in 2023. So this is where I will go back to sir again. Team formation, I mean, the reality on the ground is unless and until I don't give an endorsement, demand is being confirmed. Initial years, none of us took these endorsements because it was not mandatory. So it's like a deadlock. So again, it's my own disclosure that they're asking for documents. So in such situations where it's not even required, how do we tackle?
I think there is no standard answer to this particular question. First and foremost thing, you did mention about the comparison, whether gross or net, etc. In the beginning itself I told, there is no uniform practice. If I have taken a revenue from operation, from my perspective I am right. If somebody has taken even a value including the other sources, I mean income from other, right? They're right from their perspective. There's no right or wrong. It's only a matter of decision which you are taking, considering the precautions you want to take. Somebody wants to say, no, I don't want any people who come for an audit to check and say that why you did not disclose this. So I will include everything in my P&L and give a deduction method and arrive at the figure and show a reconciliation, so that there is no objections at a later point in time. Fair enough. So that this can avoid. But however, you cannot have expected this question before you undergone this departmental inquiry. Because you have filed all these returns in those periods.
Yes.
Today you are working with the knowledge of the last 5 years, which should have been saying that you should have done this 5 years back when you did not have any knowledge. So I think that is something which you can't expect. And a specific question about the documentation part of it. See, I want to emphasize the scope of different sections are different. Section 61, scrutiny. You have filed information, they find a discrepancy, they shoot you A10, you are supposed to. They cannot carry out an inquiry by virtue of 61. 65, audit. They carry out an audit. What is the definition of audit is given. So going by that, what is the scope of it? Examine your turnover, payment of taxes, etc., etc. There, they can ask for information, you produce. Now, whether you should produce that proof, not produce a proof, whether during that period the provision required is a legal interpretation. Okay? So, that is when it comes up, he takes his stand, you cannot force him to accept your stand. At the same time, there is no necessity that you have to accept his stand. But however, the reality lies in between. Reality lies in between because the management, let me tell you, all of you who are sitting here, I don't think any of you are the entrepreneurs themselves. They are all representing the clients. So there you are answerable to client. So you tend to say, why headache? Okay, though the losses doesn't require, I have all the information, I'll try to give, or I'll run to the SEZ, get that certification endorsement, give it so that management doesn't want any notice to come because it will become a balanced reporting item. So that is what we are more interested in. We don't want litigation. But it may reach to such a situation that it is not possible. Then is where you take a litigation. So your question, what should I do? There is no single answer. But technically there is no requirement to establish up to certain point in time because it is for authorized operation. It only says supply to SEZ under section 16, zero rated supply. Supply to SEZ as can be established even through a registration number itself. So that was a sufficient compliance. But the litigation goes on, you will find a result after maybe another 5 years down the line. Till then whether the client is ready to take up the litigation. Depending upon that, you should take a call and try to give as much as information. If you don't want to take a litigation, but you want to say, no, I will go by the strict wordings of the law, you are right in doing it, but your client should support it, his risk appetite should support it. There is no, that's all individual call. I cannot say that you should not do this or you should do this. It is not, I am not right in saying so. Okay?
So, before I move ahead, we all know, right, what's the turnover limit for 9 and 9? So, anything less than 2 crores, 9 is not applicable. Anything more than 5 crores, less than 5 crores, 9 is applicable, but 9C is not applicable. More than 5 crores, by default, both are applicable. Again, 9 and 9C is not applicable for ISD, CTP, NRTP, TCS and tax deductors. So, these are the categories of people who are excluded from the filing of 9 and 9C. Now again, jumping into these changes that have been proposed for reporting of 24-25. The first and foremost change was in relation to transactions that supplies that I do through an e-commerce operator, wherein the e-commerce operator is supposed to pay tax. So hitherto there was no disclosure as such. I think there was no specific table which dealt with how do I report, if I am the supplier, how do I report these supplies without paying tax or without showing tax amount. And if I was the e-commerce operator, how do I show these supplies and also show that tax has been paid? So they've introduced 4G1, correspondingly 9K2. Okay. So first column is GSTR-9, second column is 9C. These are all corresponding columns. So 4G1 and 9K2 deals with the reporting that has to be done by the e-commerce operator, wherein they have paid the tax on all the supplies made through them which are notified under section 9.5. What are those services? Restaurant services, cab rental, then housekeeping, accommodation services, etc. Now for the supplier to report that I have done these supplies but tax is not payable in my hand, it is 5C1 and 5B1. So these are specific columns in the table. Now they have introduced another table called 6A1. All of us face the difficulty establishing or demonstrating that in the year 24-25 or in a particular financial year, the credit of last year was claimed. While in the previous year I would have disclosed in a separate table that it was claimed in a subsequent year, in the current year's annual return there was no place to demonstrate that last year credit of XYZ amount was taken in the current year. So identifying this difficulty, they have introduced another table called 6A1. Basically deals with all the credits of last year, that is 23-24, which are claimed during 24-25. Just a small exception, if the reclaim or the claim of ITC was on account of Rule 37 or 37A, again 37 talks about payment within 180 days to the supplier. 37A is basically when the vendor does not file his 3B, I am supposed to reverse that ITC, that is the newly inserted rule. So if the reversal was made earlier in 23-24 or previous years, but I complied with this in the current year, that is 24-25, and I have taken the credit in 24-25, this will not form part of 6A1. If it is Rule 37, 37A, it has to go to table number 6H and not 6A1. Again, I'll come to all of these scenarios. It will be easy for us to understand with examples. Now 6M was there before. Now what was 6M? It was a general head saying any other ITC that I have claimed. Now they have made it specific. To say ITC that is taken through ITC 01, 2 or 2A, that is basically in case of conversion into a taxable person from composition to taxable, or when exempt becomes taxable, or when there is a merger, demerger, any transfer of business where ITC gets transferred. All those special scenarios have to be reported in 6M. Again 7A1 was introduced, wherein if I have done any reversal during the year on account of 37A non-compliance, then that has to be reported separately. Now, how many of us have observed that actually Rule 37A non-compliance comes in GSTR 2B of October of the next financial year? Have we seen this? It gets auto-populated.
I think, firstly, I don't know how many of them are aware of 37A. How many of you are aware of Rule 37A? Can you just please raise your hands? And you are talking about a disclosure. You explain about that.
So 37 is very simple. Wherever there is a condition that I have to pay the supplier within 180 days from the date of invoice. So if I fail to comply with this, then reversal under Rule 37 gets attracted. So subsequently, whenever I pay the vendor or the supplier, I can get the credit back. Again, there is no time limit for reclaiming this credit under 16(4) what we have, right? Up till November, 30th November of next year. So there is no time limit. Now what is 37A? There is one condition in ITC section 16 which says supplier should have paid the taxes. Now how do I validate this? I can only check if he has filed 3B of that particular month, and the turnover declared in GSTR 1 for that month matches to turnover declared in GSTR 3B of that particular month. Now 3B filing though I can check. I will not know whether the turnovers in both the returns are matching or not. But the system only has to do. Again, that also has been introduced in the system. If I log in to any of our clients login and search a particular taxpayer GST number, I will get to know to what percentage of that month's return has been discharged. So let's say 100% is what is mentioned. That means I'm rest assured that if the invoice is reported in GSTR 1, which is appearing in my 2B, he has completely paid the taxes in 3B. So I am satisfying that condition. Now, we were complaining continuously saying where is the mechanism for me to validate the vendor payment, how can I do, because this is not in my control. Then they smartly introduced another rule called Rule 37A. they said, I will give you time for your vendor to comply his payment up till September of next year. So let's say he has reported a particular invoice from April 24 to March 25 GSTR-9. He has to file 3B of these months by September of 26. If he does of all these months in any of the months that I have taken credit, then your credit is valid. I am deeming that this section 16(2)(c, basically payment of tax by vendor, is established, or is it met by you with the condition. So this is all about Rule 37A. Now this is being auto-populated in the GSTR-2B of October of the next financial year. So October is the last month in which we can do all the corrections, right? That all of us are aware of. So October 2B, another checkpoint is C for this Rule 37A reversal sheet. It will indicate all those invoices which are appearing in my 2B, on which supplier has not filed 3B within that deadline of September. So we have to first check whether I have taken the credit on those invoices. If yes, then I have to take action under Rule 37. Now again, similar to Rule 37, even 37A gives a provision that if the supplier pays the taxes subsequently, I can take the credit. For this also, there is no time limit, which is under 16(4). So this is 37, 37A. Clear?
I would like to just give a little different perspective of this Rule 37A. All along we were thinking that, okay, at the time of taking credit, the supplier should have paid tax. Correct? Agreed? But here is a rule coming in and saying, need not. It is not necessary at the time of you taking a credit, the supplier should have paid a tax. It is enough if he pays a tax till next year September. So 16(2)(c) is not a condition precedent for taking a credit. It is a condition to be fulfilled. In fact, the rule itself is permitting the window of the supplier to pay till next September. Okay. After introduction of 16(2)AA, 16(2)(c) is independent. If 16(2)(c) was covering your 2A reporting, then there was no need of introducing 16(2)AA. So all the notices which was being issued earlier, saying that it is not appearing in 2A, so 16(2)(c) is violated. I think you can take this ground.
Sir, but section will be contradictory. Rule cannot override.
No, not rule. I am just telling 16(2)AA is a separate condition, where you are reporting in 1 by the supplier, appearing in 2B or earlier 2A is one condition. Payment of tax by the supplier is an independent, different condition. If the department has not established the fact that the supplier has not paid through a different evidence, merely a 2A cannot be a basis to say that the credit is. What I am just trying to say is, the law itself is permitting the later payment by the supplier. So it is not necessary that in that month 2B, the 3B status is not filed, cannot be made as a basis to deny credit, which in many cases that is used as a basis to deny credit. So that is what I wanted to highlight. This is ratified through a rule itself. Okay. I am just give you some points for your defense in some notices.
So next change is in table 7J. Now 7J all along was the net ITC I have claimed during the particular year. But since they have introduced 6A1, now 7J does not include 6A1 by default. It's a formula that is given. So all along we used to see if 4C, that is the net claim in my 3B, is matching to my 7J. Now any mistakes that I've done in either of these columns, we can say it's a procedural lapse. But now it will not happen that way. So 7J will not match to 4C of my 3D. We will have to add another element of 6A1. So that's something we have to keep in mind. Because most of the notices that we get are system generated. Now again they will say 7J versus 4C, there's a difference. By default 7J will be lower only because it will remove all the credits of last year. So this will show a short, I am admitting a shorter claim in 7J vis-a-vis the actual claim in 4C. So this can be one of the differences which we have to bear in mind. Now 8H1 talks about IGST taken on import of goods in the subsequent year. What is bill of entries that are filed during 24-25 claimed in 25-26. This was not there in the earlier form, now they have introduced. Now 9 and 14 talks about the taxes payable versus paid during the year. Now they have added a difference column to say that whatever I have shown as taxes payable are actually paid, so that if there is any shortfall or excess payment, it arrives in the system, the form itself. 14 again talks about taxes that are paid in the subsequent year. That also, there's a difference column. Are we clear with this? So these are the major changes actually. Now coming to the disclosure per se. So these are all the tables that were there earlier also. It's just that in 6C, which talks about import of goods or SEZ purchases, earlier we had the option to show everything as inputs. And the bifurcation between inputs and capital goods was not required. Now it is mandatory from 24-25. Now table 7, hitherto all the tables of 7, that is A to H, were optional. I could have put everything in 7H. But now it is mandatory to bifurcate all the reversals that I have made. Either be it temporary reversal, permanent reversal, Rule 42, 37, 37A, ineligible, you name it, that has to be shown separately in GSTR in table 7. So that's one thing we have to be very careful because it was not mandatory before, now it is mandatory. Now 12 and 13 of 9, which deals with credit that I take in the subsequent year, was not mandatory up till 23-24, which has become mandatory in 24-25. The most interesting part is part 5 of our GSTR-9C. It used to say that any tax payable or any tax that I identify as payable after filing 9 or 9C, we were allowed to use only cash as a mode of discharge. The rule, the instruction if you read clearly. Now they have amended this instruction. They have said if you identify any liability which is arising on account of annual returns. Say I did a mistake, I did not pay during the monthly returns, but I identified it during 9 while I was doing the YTD reconciliation. That I can pay using credit balance as well from 24-25. So we have in fact got notices before wherever in DRC 03 we selected the cause of payment as annual return because that's a separate cause of payment, and the debit was on account of ITC. Notices have been given saying how did you use ITC when the instruction to the form said it was only through cash. So to avoid this, we used to practically do voluntary and not show annual return. So that doesn't get picked in the system. But going further, no worries, even if I pick annual return, it should be allowed. Now the question that I was asking sir was, from today it is there. What happens to payments that, basically what happens to notices or what happens to payments that I have already made using ITC where the instruction did not have the facility of paying through ITC?
I think before I answer this question, can you just go to the first slide? See, let me first overview of the structure. Yeah. See, let me tell you frankly. I want to ask a question. How many of you sitting here really memorize the table numbers? Can you just please raise your hands? I cannot. Okay? But that doesn't mean that we can't understand, we cannot do nice things. We need to understand the structure broadly. As I told in the beginning, it'll take some time, so you can sit. Okay. As I told in the beginning, I think better I My mind works faster when I stand. Okay. Uh, if you understand the structure correctly, I told in the beginning, this return filing exercise is nothing but a figures. We as a CAs, the fundamental thing is bank reconciliation statement. But I am seeing many younger people who is sitting here also. If you talk about BRS, this is tally it comes, sir. Whereas little mid-age and thing, we would have done ticking, comparing the differences, identifying the reason for it, where to post it, and put on separate tabular form to arrive at why the difference is. The overall objective and purpose of this both the returns is to compare figures, start from some point, arrive at some point. Okay? Broadly into three parts. One, your turnover part. Two, your input tax credit. Third, the tax payments. Payable pay. Broadly, if we understand this and whatever, I don't know, from starting table, leaving up that introduction, etc., 4, 5, all those things, essentially deals with turnover. There, your GST liability is not only on your supplies outward, there is also liability on your inwards. So when they want to compute your tax payable, they want you to put both of them together. At the end, they want to arrive at what is the total value on which the tax is value of which taxes are supposed to be assessed, against which how much is IGST, CGST, SGST, in brief. Now, in this, two alien figures are coming in. That is, generally as sales you will be able to identify, but two alien figures are coming in where one, you are liable to pay tax under reverse charge mechanism, which is not your sales turnover, and one more element which got recently, that e-commerce operator, where it's not even your supply. Somebody's supply routed through your portal, so you have been made a scapegoat to pay tax on those things, so it's your liability. So it gets added to your liability. Now both these has to be reported somewhere as your liability, but again, when it comes to the comparison to your financial statements, these two alien figures has to get excluded. So that is where whatever the table number he mentioned about G. In G it talks about 4G. There is one RCM figure. There they added one more thing, the second alien figure of e-com operator. So that is the one changes which I understand from whatever he explained. So that is added and both gets deducted to arrive at the figure comparable to your financial statement. If you keep this in mind, I think your table 4, all the aspects are taken care of. I am very crudely explaining it. Okay? You are all CAs, so you can actually get into the individual workings and address it. Crudely, this is what is in sum and substance. My next question, and which mostly you will come across, the figures which needs to be mentioned here is as per the values, as per the returns, or as per the books. Sorry? Huh? No, again, okay, yeah, I think he'll address about it. I think this is a one important question which has to be there, because otherwise all the figures are in return. Why was the necessity for the annual return again? If it was simply a compilation of 3B. So, in other words, it is a last opportunity for the taxpayer to relook at his figures and take a corrective actions and put up a right figures over there. And that is when the liability will come in. The differential taxpayer will get paid. So So this is how you can look at that, whatever the turnover tables, whichever the table numbers are there, is what we need to look at. So I think you are clear with this first broad aspects. Okay. Nitty-gritties you go back, see table number, see instruction, read, try to understand. But summarily what it is expected is this. The turnover should be as per the books. The turnover should be to match ultimately your financial statement. Now, these are all there in your financials. As a professional, as a person who is supposed to add value to your client, it is not that what is there in the figures try to match and provide the details and file return or assist them in filing return. List out the points which doesn't get covered or get recorded in the financial statements, in the profit and loss account, but which can be sitting in some other places in the financial statement, like sale of fixed assets, blah blah blah, wherever it is there, or a related party transaction, branch transfer, okay, disposal of assets. So I think a checkpoint is more to list out situations which you may tentatively miss out by looking only in the financial statements, because it is most of the time you may not be preparing, some of the article student or the junior staff may be preparing, they may not be aware of those high level things. Probably I think a checklist to look at items which can miss out the disclosure in a turnover, which would have got a missed out turnover, is the items which requires attention and disclosure aspect as far as the turnover is concerned. Similarly, coming to the input tax credit, again we are only busy with jumbling with the figure, trying to match figure 2B, etc. There also, as he mentioned, I think the credits, which is where some additional disclosure requirement, because earlier they had designed certain structure, but if you add and minus, it was not adding up to the required figure. Why? Because there was a gap. Last year credit, awaited this credit year. There was a one rows which were missing. They have added. I think that is what has been made. Ultimately, forget about the columns over there. As an auditor, if you do a reconciliation of whether the credits have been taken rightly or wrongly, you have done an audit. You have done an addition and deduction to arrive at the correctness of the credit survey. That's exactly what you need to look at, and it is input in different boxes. Otherwise, it's the same. You either go with your working and try to match, or understand this working and try to be logical, which will give you the input tax credit. And tax payable, paid is very much there. One of the important points he did mention, the last, which asked me a question, to which I took over. There is some short payment which has happened. Whether that requires to be paid through cash ledger only or can also be paid through credits. In the original, there was instruction, one of the instructions said, whatever the payment made through return should be only through cash ledger. It cannot be through credit ledger. In fact, at that point in time, earlier we were always saying, just one day before filing GSTR-9, file DR-03. Don't select payment consequence on annual return. Just pay DR-03. While you are paying DR-03, there is no restriction for utilizing a credit. And then you file return. In your return, whatever the note sheet put that, this was paid one day before the filing annual return. So there was no effective restriction. This is what was being suggested. People have done. Those people did not got a notice. But some people who selected while paying DR-03 returns payment, they were utilized it, they have got stuck. Now this particular amendment in the instruction saying that it can be also paid through credit, whether it is retrospective or only prospective. I was telling him, asking him rather, is there any change in the provisions of the act? The act? No. Is there an amendment in the rules? No. The pay returns, this whatever returns we are filing is filing of a return prescribed format. It is not dealing with the payment of taxes, etc. So payment of taxes is governed by general whatever the rules whichever is there. There is no amendment to that. So which means they amended the instruction means they are accepting what could have been done in the past also presently. So this can be a basis to say these changes should be considered as clarificatory in nature and can be applied retrospectively. So this is, I also told you why and what is the basis. If some such past cases are there, you can always address this in this manner. Yeah. The question is answered?
Thank you, sir. So these are the brief changes I tried to capture in a nutshell. Going ahead with the changes that are made in terms of the ITC disclosure, basically we have to refer 3-4 tables: 6A1, 6H, 12 and 13. Now, by the end of the session, I'm sure all of us will know what is 6A1, 6B, 6H, 6J, all these tables. Now again, these instructions are very self-explanatory. I thought I'll just highlight it for our ease of reference. So 6A1, I was trying to say that it deals with credit of the previous year that are claimed in the current year, which does not include claim on account of Rule 37 or 37A, reversal of the last year. Now 6H. Okay, before going into 6H, one small question. How many of us are following this ITC disclosure as per Circular 170? Circular 170 spoke about reporting the entire ITC that is appearing in 2B, then pushing something that I don't want to claim in the current month as temporary reversal. Then in the subsequent month, if I have to claim, I will put it in 4A5, then show it in 4D1 of my 3B. So how many of us are following this method? Just 5%.
Data.
Sorry?
Data is available in the
Right. I'm sure all of us have got this advisory, right? I'm pretty sure everyone has got this advisory saying this much credit is unclaimed as per 2B. Please claim it and reverse it so that I account for my revenue. Now all of these advisories are an offshoot of this circular itself. Now this entire change in the ITC revolves around me following this circular 170. So if a person or a taxpayer hasn't done disclosure as per this circular 170, I go back to whatever I was doing previously. There's no change. If I have done this disclosure, we have extra work to do. So what are the touch points in circular 170? Let's say the credit came in first month, but I took the credit in 5th month. So what will I do? I will claim in month 1, I will reverse in month 1. In 5th month, I will claim it again. So if I see 12 months together, there have been 2 claims, 1 reversal. Correct? Net effect is 1 claim. 6H says the same thing. If I have claimed once, reversed, reclaimed, the reclaim that I have done second time has to be reported in 6H. The first claim that happens when it appears in 2B has to be reported in 6B. And the reversal that I do has to be reported in 7H. That's all. It sounds very simple. It is very simple, but how do we track these line items in 2B is a concern. So I just highlighted for our reference that 6H deals with if the ITC was availed for the first time, declare it in 6B. If it was reversed, declare it in table 7. If it is reclaimed, declare it in 6H. Now comes 12 and 13. Now 12 and 13 deals with ITCs of current year, which is claimed with the subsequent year. So no change as such. Only in 13, the only change here is it says if the reclaim is on account of Rule 37 or 37A, don't report it in 13. Don't report it in 13. Otherwise, whatever was our understanding of 12 and 13 follows. Now, since this was not mandatory or this was optional all along, we have to be very careful about knowing what these are because it's mandatory in 24/25. So 12 talks about any ITC of 24/25 which has been reversed in the subsequent financial year, that is 25/26. What can be those reversals? It can be Rule 42, it can be Rule 37, it can be Rule 37A, it can be, I wrongly took the credit, I realized later I reversed it, whatever, so on and so forth. Now what is 13? 13 deals with invoices of 24/25 claimed in 25/26. It's very simple. So what can be the reasons? I accounted the invoice only next year, or I received the goods next year. Say it was a end of the year transaction. Invoice came in March, but the goods come in April or May. Or I have a policy that I claim the credit. I claim the credit only if I make the payment. So I would have deferred a particular, input, claim it in the subsequent month. So just for our ease of understanding, this is how it looks. This is visible, right?
It's not changing.
Visible?
Yeah.
So, I'm sure all of us would have seen this, but table 4 is again output, 5 is output, 6 is where the change has happened. So this is how it looks today. 6A1 is what I was talking about. Now 6B is that first claim that I do in the month of appearance in Ruby. Now C and D talks about reverse charge. E is talking about import of goods. F is import of services. Now 6H is where we are talking. That is if it is subsequently claimed. Month 5 in our old example. That's where it comes. Now K, L, M is all these special ITC categories. M is those separate forms, ITC 01, 02 and 02A. Then is my total ITC. Then comes the reversal. All of these reversals. Now the new addition is A1, that is Rule 37A because it was newly inserted. Come down. Table 8, infamous table. This is where most of our problems were created. So this is auto-populated. Again, I'll come to understand how 8A numbers are auto-populated. Most of us have seen, right? The table 8A Excel doesn't match to table 8A auto-populated. So there are reasons why it doesn't match. Now this is the reconciliation. Now comes table 9, that is tax payable versus tax paid. So this is the new thing that was added, this difference column, which was there only in our working, not in the form, now it's there in the form. Then come down. This is basically all the transactions of the current year reported in the subsequent year. So we were dealing with 12 and 13. So 12 talks about reversal made in the next year, 13 talks about claim in the next year. So this is how the form looks. So we are clear, right? What is 12, 13, 6 and 16? Now as I was saying, table 8A is an auto-populated number. Most of the times the Excel available on the portal doesn't match with the auto-populated number. Initially when 8A was designed, GSTR-9 was used as a base to auto-populate these numbers. So basically 2A works on a return specific invoices pertaining to a particular return, a particular period. Then I think in 23-24 they changed it to 2B. They said whatever appears in 2B of that year, it will come in 8A. Now they have again gone back to the 2A regime, wherein 8A will have all the invoices of 24-25, that is which are dated 24-25, which are issued during the year 24-25, irrespective of which 2B it appears in. Whether it is coming in 2B of 24-25 or 25-26, it will appear in 8A. So just to understand, I have captured here what are the transactions, which 2B will appear in, whether it will come in 8A or not. So the first transaction is more simple. Invoices dated 24-25 appearing in 2B of 24-25, by default it will come in 8A of 24-25. Invoices dated 23-24, that is previous year, appearing in 2B of 24-25 because if the vendor has reported it belatedly or he's reported in the subsequent return, it comes in my 2B of that year, but it will not come in 8A. So all 23-24 invoices, which hasn't, which we have claimed during the year, which comes in 2B of 24-25, will not come in 8A of 24-25.
How do we reconcile with CCA?
That's the reason 6A1 we have to separate. So if you go to table A, it removes 6A1. You directly take 6B. So the effect of last year claim in the current year is removed. Now transactions of 24-25 reported in 25-26, appearing in 2B of 25-26, appearing in 8A of 24-25. The last one is easy. Transactions of 25-26 will appear in 2B only, it will never come in 8A. So this is clear. So this is very crucial to understand because when we file annual return, the disclosure that we make, we have to understand how table 8A reconciles. So that's a system generated notices. So if there is a how to be make sure the 8D is always positive or 0. It can never go into negative.
These
Because
numbers will be net of returns?
net of credit notes. Yeah,
It
yeah.
will be net of returns?
Credit notes, yeah. So it's B2B, B2BA, credit notes, credit note amendments, and these two.
Again, the issue is that reversals which come under Rule 37, etc. others, that does not make consider that the amount what the paid is gross of 90 not net of asset.
Correct. So what you compare in table A is 6B. So your reclaim will never come in 6B, right? We will come to that. I have that example. How it reconciles. So concern is only 37 reversal, no?
No, I'm talking about all the reversals.
Okay.
Others also, debit notes.
Debit notes are considered.
You take net of IDC in part number 3.
Part number 3, okay?
The IDC is reflected below comparison table. 8A. So
Correct.
it is coming gross ITC
Correct.
and reversal will show, the debit will show on the next column. Part 7. Part number 3. 7H1 number.
We can take these questions later. They will complete that particular thing. Otherwise, others will not be able to.
So in between of the year, we had invoice management system. How many of us followed that? So extra step in our compliance. In fact, that's not mandatory.
We know it's not mandatory, but to be will
It fluctuates based on our
yeah, so we can change it to be the way we want to.
Correct. So let's say there are certain invoices in IMS, but you have not done yes. It will be kept pending. It will not communicate.
Yeah.
So that is one thing we have to be careful. So wherever we have done IMS, and on any invoice we haven't taken action, it is kept pending. Those invoices will not flow into table A. So at least what I was following all along was, for me my ITC register was sacrosanct. It was final. I had all transactions in that, reversals, claim, invoice number, GST number, XYZ. Now because of these changes, the focus shifts from ITC register to 2B and 8A. So the disclosures have to be as per 2B. Now somewhere they are forcing you to follow their register versus our register. So that is one thing we have to keep in mind.
If you follow IMS, it will tally month on month.
So if we do that, then books and 2B will match.
Always match.
So how do we remember these tables? I'll just pause here for 2 minutes. 2 seconds if you can just see this. So 6A1 is the reclaim of last year, which does not include 37A. 6B talks about the first claim. 6H talks about the reclaim and last year 37A. 7A to 7H is any reversal of X.
Just one question. On this entire table of serial number 6, is it built as per books or as per written what I have already found?
It should be as per
as per
2B.
books, it will never reconcile.
It should be
If I
2B.
have to do as per 3B, but then it is, I am redoing the same thing.
Yes. So after this circle of uncertainty, right? So this reporting in 6B is just a summation of 3B.
So basically then how do I bring in what is there in the books?
That is where 12 of GSTR-9 will come into picture. How much have I accounted as ITC during the year versus how much I am reporting as claimed in GSTR-9.
Because there the word which is the availed part, the only problem is I have made invoice supplies, the supplier has even till date not uploaded. Okay, technically in my books it is still an unclaimed ITC.
Correct.
Then there is no reporting requirement in 9 actually. Where
Correct.
do I find that?
But you would have claimed and pushed it. If you followed this 170 method,
No, I wouldn't have claimed it because it never came into my QA.
right. So
completely failed.
it never come in these tables.
So then my data is incorrect.
It goes to 9C. Wherever 9C is applicable, I will show what is accounted in books in 9C. That's the only place where the first instance exists.
I think this 9 ITC related thing, it is expected to file wherever the relevant columns is what you have claimed in your returns. Okay, maybe the disclosure parts they're adding in because some places we were disclosing certain which was having a gap, which is being tried to cover up that particular thing. And let me tell you again, this entire exercise of GSTR-9 is not to facilitate trade. It is for their system to work to settle the accounts between the states and center. This 9 entire is whatever the thing plus the other thing where the information about the credits, all these are being sought from you so that based on your return they get to know how much of the amount should go to whichever the state for settlement of the taxes to the states. So do not get too much carried away with whatever the disclosures are there. Focus on what is the effective claim you have made in your returns as your eligible credit. If you have done some mistakes or errors while filing 3B, net you have shown there, but actually here it is asking a gross. So those type of corrections you make it to ensure that your reporting comes to the ultimately in the audit when you give a reconciliation, how much was your gross credit, how much was your reversal, how much was your net. Those aspects you would have not shown clearly in your 3B. Make a corrective action against that while you are filing 9. Obviously, book and claim missing, that 9C reconciliation will come into picture. But what turnover as per books, as far as credit is concerned, effectively what is going and ultimately sitting in your credit ledger. There it might be a net figure, but the gross, which is reversal, if you are not appropriately shown, you have to show here. Is that summarily fine? Do you have a clarity? Any questions on this? Yeah, Ravi.
Sir, very practical question again. We said what I am supposed to do is to basically test ITC claim as per 3B is correctly reconciled or not. I have a case where I follow a scheme where I do not even bring the ineligible credit into my 3B at all. Let's say I purchased a motor car, it is reflecting in my 2B, I decided not even to disclose it as 17.5 item. I continue to claim as net ITC.
Agreed.
Now 9 requires me to correct that disclosure. Correct? But if I try to do that, the reconciliations will not tally.
No, I am saying there that eligible input tax not claimed one column is there.
No. 3B has columns where it
No, not yet. I mean 9.
In 9, sir, again, so auto population happens as per 3B. In my 3B, the only net ITC is there. I have never disclosed that part because it will not auto populate into my 17.5 now. Now if I try to correct, my 3B input is already net. How do I again create an addition and a deletion?
It's not possible.
It's not possible.
So there it remains.
It is a question saying that you have not reversed. So that's the question.
It's not possible.
No, I think reversal. See, in fact, many people who would have here would have received a notices from the state, especially last year, saying that you have not even availed a credit, so you avail and reverse.
Reverse.
Especially ITC.
That is from 17-18 onwards. So actually, it is not required to have been done. In fact, the question which Dikshan spoke about, I'll just explain for the clarity. There is a total credit of 100 rupees reported by my supplier, which is coming and sitting in my whatever 2A, 2B. I am providing 80% exempt supplies. Or out of that, one credit is pertaining to purchase of my car. It is, I am not going to take credit. So I only took 20% of that credit out of the other credit, and also this motorway credit I did not take. So his question is, while filing 9, should I show 100, show reversal of 80, and also show this, add this motorway credit also into the total availed, and show as a 17.5 credit? My answer is need not. Need not. But in that reconciliation, whatever the auto-appropriate to be comes in, and the difference will go as a lapsing credit or a eligible not availed, it will have to reflect there and credit close.
Okay. So can we declare that thing in 9C? The reconciliation between books and this.
Sir, you show anywhere, sir. Ultimately, what your claim should be clear. What you have effectively claimed in your returns and for your books should match. Okay? Otherwise of which all these other things is only, in fact, there are a number of notices which you get where the reports come automatically from a system and there is a demand based on that. To what extent they are issuing a notice without application of a mine? Turnover as per GSTR-9, 2 crore odd. Turnover as per GSTR-3B, 3 crores. 2.7 crore GSTR-1 return. GSTR-3B, 3 crores. Differential 25 lakh. Pay tax on 25 lakh. You have paid more already than GSTR-1. But there is some difference. Any differences into 18%.
If your automotive is 28%.
No, sir, you may be doing 5% business or there may be 28%, still some of them charge other income, 18%. The taxable, first of all, what rate? Nothing. Standard rate, 18%. So I am telling, this figures reconciliation, whatever you are trying to do, okay, whatever you are discussing is fine. But why this precautions? Whatever he is trying to say is why that precaution? Because when the report is generated in the system by GSTN, it doesn't throw up any such difference, then you will not get a notice. You are not evaded tax, you are not availed extra credit, but because there is some differences, you may get notice. So by properly disclosing all this, will avoid you such exceptional report generated by GST, and thereby you may not get notice. So to that extent you have to be extra cautious, is what is the purpose of this all explanation. Clear? Is that correct?
Yes, sir.
Okay. So I think this particular thing is clear. Please, I think you can proceed. Hare Kishan, is it fine?
Its bases are claim into premium.
No, I took Hare Kishan because maybe others also may have a similar thought process. Maybe people are not opening up their mouth. So at least one is there who can open up and tell.
So again, I'll reiterate, the entire premise of these disclosure is whether I follow this claim, reversal, reclaim, or I just follow net ITC. If I'm going with net ITC, none of this applies. So I just directly show what is claimed, accordingly bucketed in those respective tables. If I do claim, reversal, reclaim is where I have to do this entire circuit assembly.
What are the examples of reclaim?
I have.
Reclaim examples.
The 6H.
Yeah, 6A. I mean, what are reclaim? What exactly reclaim means?
So
Examples.
So let's say an invoice appeared in 2B of 23-24, but I deferred the claim of that to 24-25. So if I had followed this circular 170 claim reversal, I would have claimed reverse in the same month, but it is considered as reclaimed in 24-25. So that reclaim, I mean that first time claim that I actually do is called reclaim in the system. Because for me, the first claim happens in 24-25.
So one example is when the goods have not come.
Possibly.
Yeah,
Invoice
I'll tell an
comes
example. There are various other examples. This goods were invoiced on 28th March. He has uploaded in the month of March that invoice. You received the goods in the month of April. Okay, so you have not even accounted that particular purchase in that particular financial year. So what happens? But it has come in 2B. So now you have to show gross as per 2B, but you are not. So you will reverse it temporarily, which will go and sit into your electronic credit register, not ledger. So then in the month of April, you will show a reclaiming that particular amount and put it back into the credit. So it goes and sits into the credit ledger. That is the example of thing. People are following this, this option is there. I have a doubt whether I am eligible or not. Because it's a construction credit, some decision making is there. There's so many reasons. My auditor says, let's think over whether to take or not. I have opted for opinion. So I am not sure whether I am eligible to take a credit. Then also they avail, so that no time limit to avail credit is not going to be large. So they avail, push it to other reversal. Once I am clear, I am going to reclaim a credit. If I take a credit, then interest gets accumulated. If I utilize it, then it gets utilized because of all this mechanism. So wherever there is a doubt, people are pushing that to a temporary reversal. Thereby it will be placed in electronic credit register, so that it's available for me later.
So the time limit for that is again November?
There is no time limit. Once you are availed and put into
Register there.
temporary reversal, then there is no time limit to the
In fact, the advisories that are coming, they are saying from 1780 you claim in reversal. So if the time limit was applicable, it goes against the right.
Up to one stage you can take it.
We'll wait for these events because next are all scenarios. All
Okay.
examples.
So till now whatever is covered, I think the changes have been covered.
Okay.
Any questions? So any questions to the aspects? Not only this, I am telling that opening up any other questions on 99C, filling up, you can ask, because the rest all is going to be these examples.
So try to cover every possible situation.
But
No doubts.
yeah, any questions you have on 99C, you can ask for 5 minutes, then after 5 minutes we'll break. No questions, I think everybody is perfect.
AC is too strong.
Can we have a
Watching.
general penalty notice for wrong disclosures, sir? General penalty notices, sir?
What is wrong disclosure, sir?
190 and 125.
So what is wrong disclosure?
Reversals I have not shown.
No, which section I want to know?
125.
Any violation of the provision. I violated. Rule says you have to file return. File return. Consequence of that can only result in short payment. Let them know short payment. If that is resulting into a short payment. Merely a wrong manner of disclosure in a return will not attract penalty unless resulting into any tax liability. Return has to be filed in a prescribed manner. I have filed in a prescribed manner.
So it could be this reversals are there, but it is not disclosed here. For example, there are purchase returns. So I am showing net purchases. So they can see in 2B that there are credit notes appearing.
So the burden shifts on to you that you have disclosed net.
So when I disclose net,
No,
I have
see,
made
in the interest of your own future awarding a litigation, you have disclosed cost. You can defend. Ultimately, there cannot be demand if you are able to establish it was disclosed net, whereas you had a book, accounts, etc. clearly. But the burden shifts on to you.
No, they are. Can they issue a general penalty? No.
Penalty, no.
No.
Mind you, no. Penalty of the way you disclose, no.
So I think as an extension to this, what if I don't follow the circular? Can there be a general penalty every month? Is it possible?
Again, circular.
Are not binding.
Circular is issued under which section?
170.
168. It is issued to whom?
Department.
For you. You can use it. Okay? Yeah, I think we'll break maybe 15 minutes. If we come.
Okay. So, just a recap. So, the entire disclosure of IPC is on the premise that we have claim, reverse, reclaim. We are following that circular 170. So, with these, I try to capture all possible scenarios that might come up in our preparation. So, we take one by one so that it's easy for us to understand. At any scenario we have it out, please stop me. And also, at the end of all the scenarios, if I have missed anything, I request that person to just tell me so that we can answer that. So the first and the most simple scenario, okay. So just a background, here I try to capture which month it is accounted in, which month of 2B it is appearing in, when was it first claimed, when was it first reversed, when was it reclaimed, and what is the type of reversal. Okay. So that is the first table. The second table talks about the disclosure that I am supposed to make. So here I have captured both disclosures in 24-25 and 25-26 for our ease of understanding as to how the disclosure I make here will further be impacted in the next year. So first scenario, most simple, accounted in May 24, appearing in May 24, I directly took the credit in May 24 as if this is a eligible credit. So where do I show? Just 60, no change. Second is basically our circular 170, accounted in May 24, appearing in May 24. First I took it in May 24, I reversed in May 24, that is I deferred the payment, deferred the claim. Then I reclaimed it August 24, basically I would say August 24 was the month in which I satisfied all the conditions. I reclaimed it in August 24. So how do I show this? First claim goes in 6B, reversal goes in 7H, and next claim goes in 6H. So this we understood? I'll just pause like 5 seconds in each slide so that it's easy for us to understand. I'll share this presentation so no hassle of taking photos. It's easy. So as we understand, there were 2 claims in 3B, 2 claims I'm reporting here, 1 reversal in 3B, 1 reversal I'm reporting here. Right? Next. So this was accounted in May 24, appearing in May 24, first claim reversal, that is temporary reversal in May 24, but the subsequent claim happened in June 25. That is, there is 2 years involved, 24-25 and 25-26. So in the first year, what will I do? 6B and 7H, because only one claim has happened and one reversal happened in the 24-25. Now, because this is claimed in the subsequent year, I have to report it in table 13, which talks about claim in the next year. Now, since this comes in table 13, in GSTR-9C, basically I have accounted in the year 24-25, so I have to say that it has been pushed to next year. So that is 12C. So we understood what is 12C, right? 12, okay, I'll just project 9C first. So this is the table of disclosure of ITC in GSTR 9C. So first 12A talks about the net ITC accounted during the year. All 3 heads put together, ICS and CES. 12B talks about what was accounted in last year but claimed during the current year. 12C talks about what is accounted in the current year but claimed in the next year. 12D is basically the sum of these two. So this should match to my claim in the 3B. Now, being on this page, so this scenario, since we reported the claim has happened in the next year and this was accounted in 24-25, it will appear in my 12C of 24-25 and it will come in 12B of 25-26. So it's a corresponding table. And then in 25-26, where should it come? 6A, because it pertains to last year. Clear on this? So this is the first case where it is multi-years. Next situation, accounted in December 23, first appearance in preview of December 23, claim temporary reversal in December 23, reclaim in June 24. So how do we disclose? Since this is last year claim reversed reclaim, directly put it in 6A1. If and 12B of current year GSTR-9C, because this is ITC accounted last year, claimed in the current year. Clear?
What if it doesn't match in 12C of the previous year?
It was mandatory actually. So 12B and 12C was mandatory across, in fact 23-24 it was mandatory. So if it doesn't match, there is a little non-compliance there.
Or maybe some disclosure?
There was no other place. So we were ideally supposed to disclose. We can only say 12A number is net of this claim. That's the only recourse we have. Otherwise, we were supposed to show this 12C separately.
If it was not matching, you were not disclosed, to that extent, your claim should have been showing that you are already short claim, though you would have not disclosed as claimed in the next year. Then you can always say that there was a disclosure error. But if all other tables are matching, and you come out in the next year and say, no, it's the earlier year, then there will be a problem.
In this scenario, it will come in 6A1.
Correct.
Because 6A1 says other than reclaim. My claim is already
Other than reclaim of 37-37A. This is not 37-37A. So this is a temporary reversal last year, I claimed it in the current year.
Can there be reclaim other than 37?
Yeah, so if I defer the ITC, it came in December 23. I did not want to take it in that month for whatever reason. I realized in June 24 that I missed this ITC when I did a YTD.
If I do a control F on the rules or the sections, reclaim is only appearing in 37. Can I take the interpretation that reclaim includes this here?
So the reclaim, as you rightly said, is 37-37A. So this reclaim that I am talking about is that which is created by the circular uncertainty. That's why I said. So this entire premise is claim reversal reclaim. So that was the.
Yeah, but if the reclaim gap is more than a year, then still difference is good. Because your 12B, 12C is only for that year.
Correct.
If I have reclaimed after a gap of another 1 year,
Correct.
then the gap will still become.
Yeah. So in the previous year 12C it will not be there.
Yeah, it will.
Yeah. Correct.
But there will still a gap.
Clear? So scenario 5. It's a December 23 invoice accounted in December 23, but belatedly reported in June 24, and I took it in June 24. I did not defer it. So where do I put this? 6A1, right? 6B. 6A1. For 6A1, the condition should have been I should have claimed and reversed. This was never claimed nor reversed because it never came in 2B of last year. So am I violating 6A1 there? Ideally, we cannot show this in 6A1 because this was never claimed and reversed last year. This was first claimed in current year. Now, why I put 6A1 is, if I show it in 6A1, it will never come as a negative difference in table 8. Because as we understood, table 8A does not have any invoices that are dated 23-24. So if I don't put it in 6A1, table 8 will show negative difference. If this is the only invoice that is reported. Now again, 12B of 9C because this is flowing from last year. So that's what. To avoid negative difference, we have put it in 6A1. Scenario
But
6.
if there is no negative or this is not the only invoice, then 6B is more ideal.
We can show it in 6B, not a problem. Ideally it should come in 6B because it's claimed for the first time. But the moment I put it in 6B, 8A will have zero amount because it will not report this invoice. So to avoid that, just a practical solution to say to how to come out with a system scrutiny. That's all. Any other view on this? So this is slightly deviating from the instruction. So next scenario, it is accounted last year, that is 23-24, appearing in 2B of June 24, claimed and temporarily reversed in June 24, but I finally took it in October 24 because of the time limit, 16/4. Now what was the type of reversal in June 24? It was temporary. Now what should I do? Should be 6A, 6B, 6H, 7H, ideally, right? Now, I have not disclosed in 6D because this invoice will never come in table 8. So the second claim that happens, I put it in 6A1 itself. Again, it's an extension to the previous example only. How to avoid negative difference in table 8, because it doesn't. So this is where I was trying to say, understanding when it came into the versus and whether it's appearing in 8A or 8A is very important. So both things should be satisfied. Clear? I see very blank faces. I'm not sure whether this is yes or no.
I think conceptually, I think I am not in agreement with both the scenarios you mentioned. Maybe to avoid the notices you may be doing, but it is a wrong disclosure. Because I go with the Act and rules. By virtue of section 16(2)AA, you are eligible to take a credit in the month in which it is reported or subsequent period. Here the scenario you are telling, invoice is dated December 23, but reported by the supplier in June 24. Having reported in June 24, you can take a credit in June 24 and you have taken correctly June 24. It is a credit of the current year. Merely by the fact that in your GSTR-9 auto-populated is taking 2A figures. Okay? Does that mean that they are making a mistake, so we are also going to make a mistake? Okay, I think if somebody comes out and say that actually you are disclosed wrong, I think we will be in a problem is what I feel. If the difference is coming, we should clearly put up a note, clearly in whatever your reconciliation here in 9 somewhere we can enclose PDF, where you can clearly mention the difference in so and so is because of the difference between 2A and 2B. We have taken credit as per 2B, which is matching to our thing. The 2A based on invoice is this much, and that is what the difference is for. If you put across in your note or at least in the file where you are preparing and keep it is an ideal way. Otherwise, technically it is a error, because for them also the account settlement is going to go wrong between the states. It is not even a credit of the current year. It has not even, last year account it was not there. You are taking in 6-1A. If it was not reversed, it means the 6-1A means last year credit you are taking now. It was not even there the last year you are taking credit in the current year. It is as good as you are taking excess credit. Comparison is it may go wrong. This is what is my view on it. Okay, maybe the point I am just trying to say, merely to avoid the differences, we should not conceptually be wrong. That is what is my point.
So I think if we don't put it in 6A1, like sir was saying, we will attach a reconciliation statement. That's only in cases where 9C is applicable.
Because there is a circular itself which says that 8As are not comparable. The board circular itself says there is a lot of differences, it's only for information purpose, blah blah blah. There is a cut-off date and all those things. So don't go consider that as a sacrosanct figure, is what the government itself has accepted way back in 2018 when they issued a circular. So that being the case, trying to match ourselves to that particular thing is not proper, is mine.
So that was
I'm not putting any fault on you, but I'm just
practical.
because practical. I understand that practically people doesn't want a notice. I only told. Practically management doesn't want notice. In fact, while we are coming back, I was asking, see, how is the practice? Basically it goes, if you have done 3B, when you are filing GSTR-9, if you come out with any discrepancy, the first thing what strikes to you is, how can I go and tell the management there was a mistake? Now, you have done 3B, you have done GSTR-9, then comes A7010. So what comes first to your mind? If you go and tell, no, what you only did, how can there be a mistake? He doesn't understand all this logics. So coming from that context is what he is trying to say. Okay. So maybe many of us may be coming from that perspective. You can consider that, but I am telling you, knowingly you should do a mistake. If you are doing mistake, you know why you are doing a mistake and do it. Not in a ignorance part of it. Okay.
Right. So next scenario. This is a Rule 3737A scenario. So it was accounted in April 23, appearing in 2B of April 23. It was claimed in April 23. Now it was reversed in October 23 because of non-payment to vendor within 180 days, or say Rule 37. Now I satisfied this condition and I took the credit back in May 24. So again, 2 financial years. It's spread over 2 financial years. First claim, first reversal happened in the 23-24. The next claim happened in 24-25. So how should we show this? So this directly goes to 6H because 6A1 does not capture 37-37. And ideally this should come in 12B of 9C because this is an ITC of last year coming into current year. Right?
Right.
All the back is So this is a situation wherein I have done Rule 37 in the 24-25 and the reclaim happens in 25-26. So how should I show? I first took it in May 24. It was reversed in December 24. So one claim, one reversal, 6B, 7H. Now it will not be 7H, rather it will be 7A1, that is where 37 or 37A goes. And I put it in 12C because I am pushing the ITC into next year. Next year, I will directly show it in 6H because it is on account of 37A and 12B of GSTR-9. This clear? Now, many of us would have done Rule 42 reversals, right? On a month-on-month basis, we do Rule 42 reversals based on the turnover. We also have that option to recompute the entire reversal at the end of the year. And if there's any excess reversal, I can claim it back within the due date of September of the next return, next year. Ideally, what is the due date? 30th November, I can take ITC of last year. But for Rule 42 reclaim, it is September 3 weeks. So this is the only place where the reclaim is, a month before. So let's say I have done Rule 42 of 23-24 and I identified excess reversal of last year. So when will I take the credit back? In September 24. Now where will I report this? 6A1 because it is not under that restricted clause of 37-37A. So I will directly report it in 6A1 and show it in 12B of 9C. Clear? We have faced this situation, excess reversal. No? Do we do Rule 42? Yes. So when you put exempt, it will first notice is please reverse command ITC. Now next situation is where I have done reversal for 24-25, excess identified in 25-26 and reclaimed in 25-26. What should I do? I will show this 100 that is extra reversed in table 13, that is I am pushing it to next year. I will show it in 12C, saying that it is claimed next year. Next year I will put it in 6A1 and 12B. Clear? Yeah. Right. So what we follow is we put this excess reversal in 4A5 directly. And in that month, there can be a DRC01C, basically 2B versus 3B. That way we are explaining it because I cannot reduce the reversal of current month. It will be wrong. Even if when you see rule 42, right, it says it should be reclaimed and not reduced from the reversal of that. So we are following that principle. In fact, the question should have been in the new format, the reversals are always permanent reversals. This 42, 43 is always shown as permanent reversals. Once I have myself declared it as permanent, the circular debars me from claiming it back. But that's when the circular goes against the rule itself. So we are taking the credit if at all there is excess reversal till 4A5, and that month most likely you will get that comparison notice, system generated, and we are able to explain it. Some cases it's not come, so that's it. Next situation. This is an invoice pertaining to 24-25, that is, it is dated 24-25, but it is accounted in 25-26, that is April 25, appearing in 2B of April 25 and claimed in April 25. So what, basically this is the spillover, invoiced on March, goods received in April and then reported in April only. So what do we do here? It only comes in 8C. It doesn't come anywhere. Why I put it in 8C? Only to defer what is coming from, what is auto-populated in 8, because 2B of next year is also included in table 8. Only to push it to the next year, I show it in 8C.
This is appearing in 2B of April 25.
Yeah, so it was reported in April 25 by the supplier, but the invoice is dated 24-25.
So when we said we are going by reconciliation, now we are bringing books.
Only for the purpose of 8C. Otherwise, this 8C will create problems tomorrow. So practically I've got a notice. Back then 13 was not mandatory. I think 2021. The notice said you have taken ITC of I think 1920 in 2021, but you never reported this in 8C. So we have got a notice and it's a sizable amount. I agree it's a procedural lapse, but it was converted into order and that is pending. So that is avoid.
I think Vinay, my question is, if you do this, will it not, the table doesn't match?
No, it's not implications on net ID.
It's only a report.
It's only reporting in table.
Where again, the point is, it is not even coming into B. Probably 9C your accounting thing will come, but in 9 should it come at all? I am also of the view that 9 it should not come because it is neither in 2B nor in your return, nowhere it is appearing. So that scenario, the broader scenario correctly, but I think disclosure it should be more in 9C, not in 9, because 9 is only conceptually I laid down certain principles. This is going against the principles of 9. 9 is the credits is as per returns and 2B comparison. So if something it is neither in books neither comes, and adding something is a wrong reporting is what, because fundamentally that is a different thing. This is what I feel. Probably I think in the scenario which you are telling, 9C reporting might not have been compulsory. Now that 9C reporting is compulsory, better to put in 9C alone.
But 9C will not consider. It was never accounted in that way.
Books also not accounted. So nothing.
So it was never come. I put it only in 8C for pushing the credit to next year.
What will be the answer if the same scenario is relating to an RCM? Let's say there is an RCM liability pertaining to 24-25. I have declared and discharged it in 3B of let's say April 25. Will your answer still be the same to report that in
8C disclosure is only for those transactions which are flowing as credit in table 8. Your RCM will never come as a credit in table 8.
How that gets reported?
An RCM transaction of 24-25 reported in 25-26.
It has been discharged in 3B of next financial.
I will show it in table 10 that it is tax paid next year, and I will show it in table 13 that tax ITC is paid next year, and what do you say, 12C.
The moment I do that, my tax payable summary, it will say a liability.
It will not, because you will not put this in table 4 at all.
Then my calculation will not be concerned. Again, there is a mismatch.
If you don't show it in table 4, table 9 will not show difference, because you will not pay tax in the current year. You are paying tax only in the next year. So I will directly report it in 10. What flows to 9C is 4 plus 10 minus 11, which will reconcile with your books, because the books reports your RCM liability. Now for ITC, I am putting it only in 13, because books also has accounted RCM ITC. Now it will come in 12A of 9C and it will be reduced from 12C.
Okay.
So everywhere it will get bigger. Unless we follow practice of showing it on the 9, so which we generally don't. Because 9 will show a shortfall. We don't want that situation.
That again is an incorrect disclosure.
No, it's paid only in the subsequent year.
No, you have raised a self-invoice in the next financial year. So you are not even accounted.
Exactly.
So no, and the previous financial year. So it is the next financial year liability, you are disclosing next liability. So 10, table 10.
Exactly my point.
That's what he is saying, 10.
No, but he's asking me to declare it in 24.
No, that's what, in 24 next
I
year.
would say I will not even disclose it.
No, he's saying
24,
25.
25. I directly
No,
take
so
it for
please ask this
25.
question where 24-25 have paid next year.
Correct, 24, 25 is paid, he is disclosing 24, 25, table 10.
That means it's paid in the next year.
No, my self invoice itself gets raised next. So why should it even form part of 99C here at all?
But your,
Liability of interest, all those years.
no, that's okay, no. I am telling whether the expenditure part in 9C accounting if you have made, I mean your books of account,
Right.
in 24, 25, then it will not match up.
So the liability can
Am
be
I
related in
required to reconcile an expenditure head altogether? No.
that table is
Yeah,
not
Liability itself.
No. The provision, what it will do a provision for 31st March, so it will matter. Anyway, I think again, don't get into all these things. He is right in his own way, he is right in his own way, you are right in your own way.
no straight checking.
Okay. Because 9C is merely a disclosure. 9 I told is a dummy return. Okay.
So next situation is just an extension to the next year, that is transaction of 24-25 claimed in 25-26. So it's accounted in the next year, appearing in the next year, claimed reversed next year, finally reclaimed in next year only. So if I go basis our original thesis that none of the transactions that are not accounted in 24-25 shouldn't be reported. The first column where I mentioned 8C should become 0. But if I want to avoid further being abundant caution, I would put it in 8C. Next year it will come in 6A, 6B, 6H and 7H. Any doubts on this?
There is a question, why not 13?
Correct. So again, that will answer the point that it's not accounted. So that was supposed to be my question, I missed. So we will not put it in 13 because it was never accounted in the current year. 8C is only abundant caution. Because I know I have claimed subsequently, I want to put it in 8C. Tomorrow it will be able for me to, easy for me to establish, that's it. That's the only thing. So next situation. Here accounted in May 24, 2B of May 24, first claim, first reversal, May 24, reclaim in November 24. I identified a violation of Rule 37-37A in Jan 25. I took back the credit in March 25. So there has been 3 claims, 2 reversals, 1 net claim. So once in 6B, 2 times in 6H because it is reclaimed and reclaimed on account of Rule 37. 2 times in 7, one is 7A on account of Rule 37 and 7H because it was temporarily reversed. So 5 entries, that is 3 claim, 2 reversal, 1 net claim. So the net impact of this is 100 rupees. Clear? Yes. I thought everyone will have doubts on this. Easily pass.
The 37A reversal should have happened 6 months from November or from May.
It should have been 6 months from May.
Yeah.
My bad, I identified that as my bad. So next situation is where I do the reversal in Jan 25, same extension, but I reclaim it in next year, in 25-26. So 2 claims, 2 reversals in 24-25, I disclose. And I put it in 12C because it's claimed in the next year. Next year I directly take it in 6H because 6H talks about reclaim and I show it in 12C. So the claim effectively is happening in 25-26. So in 24-25 it is 0.
What are the consequences of not following circular website?
That's when we say.
Rather than doing this 100 into 2, 100 into 3,
Right.
what if
We
If you
have
are not done, don't get into all this.
exactly. If you're not done, don't get into all of this. Correct.
If you have not followed the circular,
None
don't
of
get
the
into
above.
all these things.
Correct.
Show your net figure, match it and close it.
Correct.
All this is nothing but adding, deducting. Okay.
Because there will be one more mistake. There will be one more notice.
Okay. Anyhow, I think how many of you sitting here has done math background and then come to CA?
No, in fact, I have math formulas at the end.
No. I'm just telling, if somebody has studied maths, probably they can understand little better. Because all this culprit of all these things is the software guys who are sitting in GSTR-9, okay, trying to design this plus minuses figures to come, which we don't understand. They don't understand our law. So that is a disconnect. So they are doing their way of doing things and forcing us to adopt ourselves into it, for which the present our taxation system is giving the task to for it. I think that is where is the reason for behind all these things.
That's why we have GST law and voter law. GST.
But which one prevails?
Whatever officers law.
My God.
Okay.
Law will not prevail.
So the last scenario is a situation.
Previous one. So you said that
10A or 10B?
previous one. In this it will not this way, sir. Previous one. Now that amount of 100 rupees, in table 13 you mentioned.
Correct.
Because it is accounted in April 20.
Next year.
Correct. But now if I go to the table 30, it says that the ITC for the financial year. Now it does not mention anything about the accounting in the same financial year. So how that interpretation is?
So that's what. So we follow the original thesis that what is accounted only, we do it in
But
30.
it is not mentioned anywhere.
It's not mentioned anywhere. That's the reason I put that question. Why not in 30? So if we follow that thought process that, okay, I strictly go by the instruction that anything of last year claim next year, I should put it in 30. But if I go with the thesis that it should be accounted in 24-25 for me to report it in 13 and 12, then I will not get it.
Accounted things will come in GSTR-9C.
Correct.
GSTR-9C specifically contains a reconciliation wherein you accounted in the goods and payments the next year. Now this is talking about from the point of view of ITC appearing in the GSTR-2A is what I think. But it does not mention anywhere about the accounting. There is a separate reporting for the accounting. Why it should not come in table 30?
We can show it, sir, not a problem. So that's what. So two.
Vinay, you can show in 30. No, I think each one of us having a logic to substantiate our claim because we have adopted that practice for these many years, and that is what you have taught your articles, your people, etc. Suddenly after this session, if you go and ask them to change, it doesn't work. So I am very clear in the beginning itself, there are different ways of disclosure. As far as possible, there is no misdeclaration of the effective credit. Effectively, the way you are adopting should be continued unless it is conceptually and fundamentally wrong. That is what my disclaimer on GSTR-9 9C disclosure. Because I think this is a practice which should have been adopted. It is not so easy to change. Because if you change in the current year, last year reporting and this year reporting will get mismatched. Because that is the figures which have been carried forward. And you will be having some Excel sheets. From there the carry forward link will be prepared. And there is majority we have already automated, systemized. If we try to alter anything, it gets affected. But by virtue of these latest changes, if you are doing your whatever the formula changes, see what happens to the previous disclosure impact on the current disclosure. Whether it's going to be double reporting or a reporting escapement. See to it there is no double reporting or escapement of reporting. Ensure that that is what is the underlying key. Otherwise you can continue with a similar pattern subject to the fact that again what methodology you adopted in filing the GSTR-3 return, the circular 142 or whatever it is in called. Because many of the clients who comes, they say, sir, what is 142? Wherever, as I said, CA offices are filing the returns, they might be following 142. 172. But whereas the accountants who are filing the GSTR-3B returns, they are not getting into all those things, they are following the same old system. So I think that is where you have to be adapting yourself, escalating the figures, plus and minus, may be you have to be extra cautious. It should be a conscious call, in which case you need to change, and if you are making a change, make a clear note in the thing. In a 3B it was not disclosed, only for the purpose of 9 we have made these adjustments in the return. I think anybody who is preparing GSTR-9 should have a specific note sheet attached to that. What are all the action, specific decision you have taken, make a note, because after 3 years when the audit comes, nobody knows why that changes have been made. So better follow that system of having one note sheet. If you maintain an Excel sheet, one sheet specifically for notes and comments, which adjustment, why you have made, consequent to what understanding you have made. Even if you have done a mistake, the reason for that mistake we can deduce out of that particular notes. I think this is one thing which you can take back from this seminar. Make a notes as to each of the changes, points which you want to take some calls and make a points.
So this is the situation where we follow that advisory also. Then we claim and permanently reverse. So assuming that I have done that. So this is a situation where I have not accounted the invoice only. It's coming in 2B. I had deferred it to a future date. Now I know anyway that asked me to permanently reverse. I took it back in October 25 and I permanently reversed in October 25. Now how should the disclosure be? In the first year, first claim and reverse, so 6B, 7H. Now I have claimed and reversed subsequently, so 12 and 13. 12B, 12C, so 100, 100. In the next year, I will put it in 6A1, show it in 7A. In 12B, I have put 0. It basically means 100 minus 100. It's not, dash. That means summation of 12B and 12C of last year was 0 for me in the current year. So this is the disclosure I would follow if I have deferred the ITC and permanently claimed and reversed it. Now, practically what will happen, in next year if I put it in 6A1, it will not come into 6J, that is, it will not flow into my total ITC. Now again a reversal in 7H will be double impact on my net ITC. So if I compare this with my net claim in 3B, it will be a problem. Now I'm hoping that the system will capture this, but this can be a cause of concern in the next year because it doesn't flow into the net ITC. Any doubts on this? So these are the scenarios that I took. I think I've covered almost every variety. Anything that I missed, any scenario that comes to your mind that I missed. I've done last year, current year, next year, Rule 42, 37, 37A, temporary, permanent, everything. So all the situations covered. Done. So this is a little deep diving into our disclosure that I have made. Now, 8C also talks about claiming the next year. 13 also talks about claiming the next year. 12C of GSTR-9 also talks about claiming the next year. 6A1 of next year talks about claim of last year. And 12B of next year talks about claim of last year. So, these are the scenarios and where the reporting happens. I think this will help us to understand if there is any difference between these tables. This could be the reason. So I'll just pause. Basically, tries to summarize all the situations that we've covered and what could be the possible differences between these 5 tables, which essentially talk the same thing. Anyone has any doubt in this? If I say it, it will be this repetition of what I want to say. So I don't want to. Right. So, based on our experience of these many years, we try to develop some sort of a checkpoints as to which disclosure needed in which table should be matched to what table. So these are the basic reconciliations we follow in our office. So to ensure that 9 and 9C before it is filed, we do these cross checks. Tomorrow no one raises any questions.
Covered the ITC available, whatever 23-24 I have availed, and in 24-25 I have permanently reversed it. Should I let it out in 6-1 itself or should I do it in 10?
It will be 7H only. Because claim in last year, reversal in correct year. No?
Claimed in last year, reversed in current year.
So it will come in 7H, and if at all we have done disclosure correctly, it should have been reported in 12 of last year.
Can you go back to that scenario? Last scenario.
11.
Not accounted you, but you are asking us to report it in 12.
So this is a situation where sir was pointing out. I bought motor vehicles, in 1 month. I have not accounted the ITC only. I have directly capitalized it. So I have not taken the claim, but I would have claimed and pushed it.
No, capitalization is accounted.
I am saying the ITC.
ITC accounting is not.
ITC accounting is not done.
And have you?
I have not claimed ITC basically. That's what I mean. The invoice is accounted, I agree, but the ITC part is not accounted. So I went on that.
This will apply only to permanent reversals. Where you do it later.
When I do it in the subsequent month, that's what happens.
Can I show it as claim and reverse? That is what you are technically saying. I have claimed and reversed.
Correct. So in the first month I claimed and reversed, deferred it to a future point in time. Standing in October 25, I realized this invoice is ineligible for me. I took it, I permanently reversed so that for the state it's a revenue. Because if I take it and leave it, that's where the revenue gets affected, like service part.
Shifted built in a non-claimable
Yeah, correct.
in the subsequent.
Correct. Then that's what the advisory is all about, the recent advisories. So these are the basic checkpoints that we do. So I'll share this. I don't want to deal with this. It's a little. It's the same thing what I've already discussed. I don't want to deal with it. So this is how the disclosure will actually look. Now the facts is on the left side. Now there are two tables that I have captured. Table 1, table 2. Now tell me which table is wrong and which table is correct. So I have claimed 20,000 net credit in 24-25. The breakup of that is above. So ITC of 23-24 is 7,500. ITC on invoices of 24-25 claimed in the same month that is appearing in 2B is 9,000. ITC on invoices of 24-25 claimed in a different month, that is 2B month is different, reclaim is different, that is 3,500. So totally it is 20,000. Now 8A will show 45,000 because in the current year 2B it is 35 and next year 2B invoices of 24-25 is 10,000. So what disclosure should I make here? 9 and 9C. So whether the first disclosure is correct or the second disclosure is correct. The numbers are kept very simple so that we can mentally do the calculation. Right. Who believes table 1 is correct? I can't see. So that means everyone tilts to table 2. Okay. Who believes table 2 is correct?
No. Both are not.
So I need an answer. Which is correct? 1 or 2? This shows how much I have told you you understood. Please don't tell me none of the tables. Again, table 1. 1%. Okay. Table 2. I think all of us are silent. Sorry? Table 1 is correct. Table 1 is correct actually. So who believes table 1 was correct? Now raise your hand. I've given the answer. No one?
No, they will go and study again all your presentation.
So why table 1 is correct is because 6H captures this 3,500 and the net claim, the claim during the year was 38.5 because this 3,500 was claimed twice. One in the original month and one in the subsequent month. So that's the reason table 1 is correct. Again, I have tried to keep 2-3 iterations and just pass these. So yeah. So that's the end of what I prepared. Anything you want to add, sir? Or any doubt? Yes.
Okay. I think let the thank you slide be there. It's all. But don't worry, I'm not going to leave you another 5-10 minutes. Anyway, I think he has done a very good exercise, thoroughly.
So the PPT will be shared.
Yeah, I think in the branch they want to share. This particular GSTR, I mean, we talked about the changes. The focus of this particular session was changes in 990, which is what he focused. He did not get into basics of explaining you all the tables. Probably that was a topic, would have explained that fundamental tables and given you that particular perception, then got into changes. Anyway, nevertheless. Further, the disclosure aspects in your 990, which often I did mention about what is this written all about, what is the importance, how does it make a difference. I think till everything is going good, nobody is worried. Only when somewhere some officer or in your portal or in inbox there one notice comes, or when you receive 65 audit notice, all this, I think majority of this 990 related things will come in only in either 61 or 65. In 67 this will be not even looked into. 67 is a inspection search seizure. Okay? Or I think one of the aspects which we did not address in this entire session is multi-registration. Because there is no changes, but there are challenges. There is no changes, but there are challenges. Often we find in an audit, when you produce a financial statements, we have got a notices for crores of rupees saying that your your values in your financials is so many crores, but in GSTR-9 is only so much, or 9C is so much. We have been explaining, boss, this is only one state 9C, but our financial statement is for the entire country. This is one small branch of operations. My entire head office, no proper evidences have been produced to establish the same. Hence, we have no other option but to confirm the demand of tax. It's an order, not even a notice they give and you give an explanation. I am telling, this is what is a practical difficulty. So, what are the precautions? I think when you are filing 9C, you can enclose the PDF at the relevant. So, before we put a proper notes. This financial statements, this is only for so-and-so branches. Among various other registrations, list of registrations contained in it. The percentage of operations of this is only this much, limited to come back to that. Okay? I think you can self-compute and certify that if you are able to give a trial balance of that, which you have adopted for reconciling 9C, better put a summarized form of the trial balance along with that particular 9C. Sir, my turnover is less than 5 crore. You can't do anything. then if you can make a letter saying that, as a communication, whatever. Ultimately, it was done before. When they come in audit, now the fact that it is there in their record, you need not establish anything new. If something is wrong in that, the proof of burden shifts on to them. Please understand, as a general principle, anybody who claims something, the burden of proof is on him to establish the same. If he says that you are not paid taxes correctly, to establish that the taxes was not paid correctly is on them with the sufficient evidences or supporting documents. At least minimal, at least should be there. Merely difference, so you are liable, no. Especially if they are demanding taxes, they have to establish there has been a supply. Whether the supply is that of a supply of a goods or service, whether it is intrastate or interstate, because generally you find notices of a state is always CGST, SGST. We also try to give explanation of a reconciliation with lot of figures, but if your turnover is totally that of interstate, you have to simply state all my sales is interstate, you have no locus entity to, or your notice is wrong, straight away. So I think first I told existence of a supply, the supply is that of a goods or services, then whether it is intrastate or interstate, then what is the classification of a goods? If it is a goods, has to be established by the department. If it is a service, what is the nature of service? Then what is the relevant entry in the rate notification, which is specifying a rate which is being applied by them to compute a tax. Exemption is not their duty. Exemption, if any, is your duty to establish. Okay? Then the period, time of supply should also be established. Keep this as a checklist. Invariably, out of this, they would have messed up at least in two. If you do not have a case on merit, at least this will come your handy. Okay? So, merely a comparison of amounts cannot result into a demand of taxes on company. Liability cannot be, especially on the turnover differences. They issue you a notice on turnover difference, then you produce some documents, then they come to know you have claimed a wrong exemption. That is not well within the scope of that proceedings. They cannot convert proceedings of a short payment or non-payment into a undervaluation or a wrong claim of exemption. So again, you need to be aware of what a notice or a proceeding is all about. I told a couple of them, they like this, we can go on looking at it, but more importantly, when should we take this defense? At the time of first inquiry investigation or at a later point in time? So it all depends on case to case basis, where it is you can able to establish and close it by clarifying it. Otherwise, if there is actually a default per se, and you have no other, as a professional you are entitled to take all the possible rights which you to claim on defense. So you need not put across all those grounds at the stage of before issue of show cause notice. Only after issue of a show cause notice you can take that claims. Now coming to the disclosure aspect, I told in the beginning that the more disclosure you make will come a handy at a later point in time. Having said that, sometimes it can go also against you, because some sort of a misdeclaration if you are made over there can go against you. So in the, what I can say, eagerness to disclose fully, unless you are clear with the disclosure of the facts, don't simply put across some figures. And you should have a clarity. We will have a clarity in our mind, but when we write, we don't have a clarity. I repeat, we have a clarity in our mind, but when we write, our writing doesn't have a clarity. Because half of the information and facts is in our head, half only is translated into writing. So, when something, if you want to write a comment or anything, please give it to somebody who has not done that work who is not aware of the facts. To read and understand the explain letter, you are getting in the right perspective. So, because generally you think that I have written everything, but the person who is reading may not get it because he doesn't know the facts. So, this is one more thing when you are disclosing or putting on notes or a disclosure aspect, things which should come out should be clear. Exemptions. Certain exemptions you would have claimed in the returns filing, especially 9C if you are putting, in that whatever the Excel sheet, whatever the PDF file, you can mention exemptions claim, just one table, CL number so and so notification, CL number so and so notification, so and so notification, for the purpose of claim. So that later on they should not come and say, you have claimed exemption, I have never disclosed this fact to the department at any given point in time with an intention to evade tax. I can always show, please download my 9C, I have disclosed that. Okay. So I think any of the exemption, especially exemption, I request you to have a specific disclosure, because sometimes our understanding of our exemptions are wrong. I'll tell you a simple example. Renting of a warehouses for storing agricultural produce, is it exempted? Renting of a warehouses for storage of agricultural produce. All along I have been told by all the industry people that it is exempted. Technically it is not exempted, they have claimed exemption. Okay? Because the exemption talks about something else. So I think these are some of the tips I can tell where the disclosure becomes critical, and foresee the litigation and try to protect that through our present disclosures. Okay? And think what you are disclosing can result into what understanding or misunderstanding. These are some points in the aspect of disclosure in the returns, because now there is no other way you can disclose. If you officially write some letter, nobody is there to acknowledge it. Okay? So that being the case, the only window which I am seeing presently is in that PDF file which I am going to enclose along with the 9C, the only document. Otherwise you can definitely write a letter and communicate, which is the one way you can. Any questions or any doubts on whatever the topic we covered, we can address that. Otherwise, I think MC is here. Yeah.
So, is there impact on ITC claim as per if the wrong declaration in the numbers, non-declaration of numbers in line?
Sorry.
Let's say I have some ITC which I have carried forward from previous year to next year. I have not declared it in relevant column 12, 13 or 6, 8, or whatever. My 3B is correctly mapping with my 2B, all conditions of 16 to satisfied. For some reason, by mistake of an article called staff or myself.
So you should not be disallowed, but it will go up to tribunal. Be ready for it.
So you are just...
Okay, I think I can conclude. Chairman says, over to you. Thank you.
Namaste members, a big round of applause for that. Today's wonderful 3 hours study circle meeting. On behalf of Bangalore branch and member present here, now I request Chairman of Bangalore branch CA Manjunath M. Halul sir to present a memento to the speaker CA Rajesh sir. Now I request CP Jain sir to present a memento to Vinay sir. Thank you Chairman sir. Thank you CP Jain sir. Thank you. Good night.